Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trading setup as well as the market strategies you need to follow. Remember, yesterday the Nifty began this week on a positive note. Of course, this was largely led by the private sector banks, HDFC Bank and ICICI that rose in trade post their earnings. Even Eternal towards the end of the session came out with the numbers, and post that Zomato's share also rose by about 7% odd. So these were the three key names that contributed to the gains on the Nifty. We ended almost at 25,090 odd levels, and looking forward now, of course, investors will focus their attention on the upcoming earnings, the reaction on the earnings that came in after market hours yesterday. We'll focus on Paytm, Dalmia Bharat, Z Entertainment Enterprises, Dixon Technologies, Idea Forge, IRFC, Cyient, DLM. These will be in focus. Of course, stocks like Havells and Oberoi Realty that also will be reporting their earnings will also remain in focus. Of course, they came out with the numbers, and of course the markets will be reacting to that. US equities, when we talk about how have they panned out in the overnight trading action, they climbed to new highs yet again. So the S&P 500 index that rose by about 0.1%, and you could actually see record highs coming in for this one again. Nasdaq also hit a fresh record high for the 12th time this year, whereas S&P 500 reached another all-time high, 10th time this year as well. And this was largely led by the tech earnings that came in the US. Alphabet, Tesla, they inched higher, and therefore the reaction was positive on the overnight trading action on the US markets. Now, as far as the India-US trade talks are concerned, reports suggest that they are going to continue even beyond the August 1 deadline. There are some reports that are also indicating that American trade officials will be visiting India in the mid of August to probably take and carry forward these conversations going forward. So far, the indications was that at least on the 2 or 3 segments on agri, on autos, there are some talks that are stalling, and therefore they need continuation even beyond the 1st August deadline, when most of the other countries which have received their letters will have to abide by the new tariffs that have been announced by the US. Following this, Asia Pacific markets, they were also looking to trade higher. Buoyed by Wall Street's overnight gains today in trade. We've seen Nikkei up in trade 0.12%. Also, we are looking at, however, China, Hang Seng and Kospi slightly lower in trade. So it's a mixed start for the Asian markets. But GIFT Nifty is indicating a higher start by 0.4% odd at 25,188. And that's what we are going to be looking forward to. Let me welcome our guest on board. Mr. Abhishek Basu Malik is now joining in on the program. He's the co-founder and fund manager of Sri Rama Managers, PMS. Warm welcome to you, sir. And thank you so much for taking the time out for this conversation. We'll start off by understanding your overall view on the markets and how are you looking at the earnings momentum shape up, the kind of momentum we are seeing on the D Street, sir?
First of all, good morning to you and your viewers. I think, markets have been sort of lackluster for the last few days. And my sense is that the market is waiting for direction from the US India trade deal. So until and unless, sort of that resolves itself, whether through a mini deal or a maxi deal or whatever we call it, uh, probably that uncertainty is going to hang over the markets because obviously, US is a very large part. In fact, with the largest trade partners, exporters to the US. So it's important, right? And the market is waiting for direction from the US market, related to the deal. So till that time, it does not happen. I think we will be sort of range bound, few days up, few days down. That's the way I think it's going to be.
Okay, got that. So that's the overall view on the markets. Let's actually dig a little deeper. Earnings momentum that continues, and we'll take your view on several stocks. Let's start off by Eternal. That's the stock that rallied very sharply towards the end of the session yesterday after the earnings came in. About 7.5% kind of a move was already seen on Eternal. Now the stock is already up year to date about 30%. So the stock had been already in momentum even before the earnings came in. The earnings largely seem to be mixed because there is a sharp drop on the profitability, a 90% odd or so, no mean feat, but and a 25 crore rupees bottom line is what has come in. But the stock markets really cheered something in the earnings that climbed the stock higher by about 7% odd. I want to ask you to pinpoint that key factor. Was it Blinkit and Blinkit's outperformance vis-a-vis Zomato? Has there been something else that has stood out for you in Zomato's earnings, and how would you approach Eternal as a stock now, sir?
See, I think the main thing about Zomato, Eternal, whatever we call it, is the fact that the commentary has been reasonably strong. I think that is what has maybe encouraged the market. The numbers, to be fair, is not very good. Uh, the top line has grown, but growing top line in this kind of an environment is not that difficult. But if you're not making money, even at the at the PAT level, even after so many years of operations, uh, and you continue to give guidance that next quarter or next 2 quarters things will get better. Uh, the I think as a company, I think Eternal is doing pretty good, because if I look at the food delivery, if I look at quick commerce, both are here to stay in India, right? I mean, they have been able to change customer behavior, and once customer behavior is changed, then it becomes very difficult for those same customers to go back to the old behavior. So, quick commerce, food delivery is here to stay. So it's just a question of when and how quickly uh, Zomato is able to turn things around in terms of profitability. But as a core business, it does operate in a niche. So as a business, I like it. Problem always remains with the actual turnaround, when it will happen, because without that, all the valuations, etc., nothing makes sense, right?
So, Mr. Basu Malik, let me just highlight for all our viewers what have top brokerage houses penciled after Eternal's earnings today. We have a 3:1, where three reports are largely on the positive side, where targets have been increased. One has given lower targets. So let's try and understand that. Jeffries on Eternal has said they have upgraded the stock to buy a target price of 400. They believe the while first quarter was mixed, the management commentary has been significantly positive, especially on quick commerce business, which is a departure from the earlier quarter. CLSA on Eternal has said they have a high conviction bet on this one, outperform rating, and a target price of 385. They believe Blinkit is now bigger than food delivery, and that's the key trigger that they are looking at. Goldman Sachs on Eternal has also raised its target price to 340 with a buy rating. They're also raising the B2C gross order volume value estimates by about 6% post the first quarter of FY26. They also believe Blinkit's strong first quarter gross order value growth, that's 25% sequentially, is in line with their own estimates, and the new guidance of about 3,000 stores, which timeline has been unspecified, suggests demand is continued to stay elevated going forward from here as far as quick commerce is concerned. Whereas Macquarie on Eternal has given an underperform rating with a target price of 150. They believe quick commerce, yes, there is explosive growth, losses are contained, the food delivery growth is lagging. They believe Blinkit, while moderation in quick commerce losses is definitely supported, the view remains that competitive intensity will remain elevated, and as such, they expect prolonged period of losses as well. Now, of course, there are varied points of view, Mr. Basu Malik here. What will you go with when it comes to the targets for Zomato A? Will the losses, continuing for a longer period of time, be an overhang to the upside on the stock price performance, sir?
Target is very difficult in this kind of an environment. I think maybe the stock actually is poised to do well in the short term, right? At least looking by the price action behavior, it could actually go back to its all-time highs of around, I think, 300, uh, because the commentary has been strong. Uh, I think, like you mentioned, Blinkit is where the story is going to play out, and because the opportunity size, that the TAM, that the target market in Blinkit is significantly larger than food delivery, so they need to get Blinkit correct uh, for the overall profitability and growth of the company. So longer term, I think I'm bullish about the company. the only challenge that I see is the valuations. It's already, I think, above around 2,60,000 crore market cap. That for a company which is, probably making, 500. I think it ended last year at around 530 odd crore of PAT. So it's extremely highly valued. So that is the question that we have to ask ourselves is, how quickly can the pad grow? How long will it take for the pad to grow to justify these valuations? The simple answer to that question is it will not be very, very soon. So anybody who is investing versus, I'm not talking about trading. Trading, you can make short-term money, but anybody who's investing at these levels need to be very clear with a very long-term holding plan.
Okay, long-term holding plan is something that one has to be aware about, but 3% higher on top of the 7% gains that we saw yesterday for Zomato at 279 in the pre-open trade right now. The markets have also started to tick higher. 25,155 is what we have on the Nifty. Let's look at the banking names and the Nifty Bank as well, because that will be important to see. Yesterday, a large part of the gains that actually came in for the markets, despite Reliance's underperformance, was because of HDFC and ICICI banks. So let's look at HDFC. I think about a 0.9% uptick 2018, so it climbs on. Let's look at even ICICI Bank and see how that one is performing in the pre-open trade. Flattish right now. Mr. Basu Malik, when it comes to these private sector banks, what did you read through in the numbers of both HDFC and ICICI? A lot of analysts who I spoke to yesterday somehow were looking at preferring ICICI Bank over HDFC. How are you looking at both? What would you really choose? What are the key reasons for the same? Is valuation a part that we need to look at, or are there other factors that will help us understand the future course?
See, I think both HDFC and ICICI are by far the two biggest, largest, best performing private banks that we have. Both will do well. Having said that, I would probably think that HDFC from here on, if you have a 2 to 3 year horizon, might perform better because HDFC, after the merger with, HDFC Bank, after the merger with HDFC, they've taken some time, they've sort of digested the merger, and now I think going forward, maybe 1 2 quarters onwards, you will start seeing the benefits of the merger coming through. So it is more, and HDFC as a bank has not been able to perform all that great over the last 2 to 3 years. ICICI has continued to outperform it. So I think there is a chance of mean reversion happening in the next 2 to 3 years, where HDFC now outperforms ICICI.
Okay, got that. Now, before we get into some other stocks and sectors and performances, Mr. Basu Malik, another key important statement that came in from the capital markets regulator yesterday was on Jane Street. Of course, there were some news flows and reports that we consistently marked for our viewers yesterday that probably Jane Street was allowed to now re-enter and start resume trading in the Indian stock markets. We are now given to understand that yes, SEBI has issued a statement on the order, and SEBI has now allowed Jane Street to trade in the derivatives market as well. And what we're also given to understand is that Jane Street has been asked to comply with SEBI order and not engage directly or indirectly in manipulation or unfair trading. That's clearly a message that SEBI has given to Jane Street, even though they are allowing to trade in the derivatives market. They're also highlighted that stock exchanges have been directed to monitor trading activities of Jane Street Group following from here as well. So, Mr. Basu Malik, how do you read on the settlement has happened, 4,800 odd crore rupees that was impounded, and the fines that were probably put in place have been submitted by Jane Street, and finally they have been allowed to re-enter. Over the last 3 expiries on the weekly basis, we had seen a climb down on the volumes, a turnover on the NSE as well by at least a 1/3 because of the absence of Jane Street. One, do you see that coming back? And secondly, now do you think to look at the manipulation or any misadventures being done by such hedge funds will actually fall into the courts of the stock exchanges. Do you think that will be an important part that exchanges will now have to start playing?
So I think first of all, Jane Street coming back, was evident when they put in they put in the money in the account and with SEBI. And so the point here is not whether Jane Street is allowed back, etc. The question that I have in my mind is, will Jane Street continue using the same algorithms that they were using? That
Yes.
is unlikely, right? Because there's been question marks raised around that, so they will definitely not be using the same algorithms. So we have to wait and see what they do, uh, and then actually see how it plays out, because definitely they will have to come out with something different, at least till this entire you know uh, the entire court proceedings, etc., that or the arbitration, whatever process it takes, till such time that concludes. I don't think that Jane Street will continue doing what they were doing before.
So even if they change the algorithm or their modus operandi of working in the derivatives market, do you think at least SEBI's now focus will be on tracking each and every move to try and find out if there is any sense of manipulation via other methods as well? Will manipulating be nearly impossible by Jane Street now?
I think definitely they will be under much higher scrutiny. So would other, large algo players as well. I'm sure that they're already under scrutiny. The larger firms who do large algo trades, large HFT trades. I'm sure that they are already under, the scanner of SEBI, so that large market manipulation is not being, done. So I think that is anyway what SEBI does, what the exchange risk mitigation frameworks are there to actually take care of these things.
Let's look at the markets again, viewers. Pre-market has actually settled 25,166. We are looking at a 76 point of an uptick. So we could be starting higher by 0.3% in trade on the Nifty. All the sectors barring IT and pharma look to open in the positive. Banks will again be in focus. The Nifty bank seems to be, opening higher than the other indices, about 0.5%. Led by again the private sector banks and financial services. Even the broader markets could also be opening higher, but let's look at some stocks. I'll be watching out for Eternal yet again. There is an indication that it could open about 7.8% higher today at 293. That will be the first one that we will focus on. You also have some names like IndusInd Bank, BEL, Trent, that could be in focus. Ultratech Cement could be in focus. ICICI Bank, Wipro, Titan is another one that we could be focusing on. So let's look at Titan, and meanwhile we'll just wait for the markets to open as well. Titan, why is it in focus, is because the company has entered into a definitive agreement to acquire 67% stake in UAE-based jewelry retailer Damas LLC. And the all-cash deal now values Damas at 1.04 billion dirhams, that is approximately 2,400 crore rupees. It is expected to close by January 31st of 2026. And the acquisition will be executed through Titan's wholly owned subsidiary, Titan Holdings International FZCO, in partnership with Qatar headquartered Manai Corporation QPSC. Now, following the transaction, Titan will hold 67% equity and voting rights in Damas as well. And additionally, Titan has secured the first right to acquire the remaining 33% stake in Manai Corp from Manai Corp after December 31st of 2029, contingent upon specific conditions, of course. So let's dig deeper. We already have some brokerage houses updates on the same development. Morgan Stanley has an overweight with a target price of 3,876, and we also have CLSA with an outperform rating of 4,326 on this one as well. Mr. Basu Malik, how do you see this development for Titan? What does it aim to provide to Titan's own focus on the jewelry business? And would you be bullish after this development?
See, Titan, I think this is a just an extension of what they were doing. They're just expanding the market to the Middle East. There is a lot of demand that is there. So increasingly, we are seeing actually a lot of Indian companies uh, targeting the Middle East, the UAE, the entire Middle East market, and I think this is just another progression for Titan in the business that they are already sort of market leaders in.
Okay, fantastic. Mr. Basu Malik, it was great to speak to you. So thank you so much for giving us your time right in the morning, and we hope you have a great day. We'll see you soon on another edition on Business Today Television. Thank you so much for being with us.
Thank you.
All right, viewers, we will now get, in conversation with another top guest joining in. Arpit Beriwal, analyst for derivatives wealth management at Motilal Oswal Financial Services, now joining in. Arpit, before we come to the markets overall, we were discussing Titan. What's your view on Titan? Brokerage houses are penciling in higher targets following the development that the company is acquiring 67% stake in Damas, which is a UAE-based player, jewelry player. And with that, there could be a significant expansion that Titan could do in the Gulf countries, in GCC places, in the UAE market as well. What's your sense on the stock?
Good morning to all. So talking about Titan, if you see overall the chart structure wise, from last almost 12 weeks, from last almost 3 months, the stock is trading in a range between 3,300 to 3,700. In last couple of days, post the update from the company business update, the stock corrected from 3,700 to 3,400. But now again, the stock has formed a strong base near 3,400. So look at the chart specific wise, it is near its support zone. So risk reward is favorable for a pullback move towards 35.50, 36.50. So I think broadly in a range near its support zone, 30.50 would be a major support zone for this counter. On the upside, 35.50 and then 36.50. Slowly, steadily, we can see on the charts going forward.
Okay, got that. Right. Now, let's understand from you, how would you look at the markets today? What catches your attention? It's an indication of a 76-point uptick on the Nifty. What will you do?
So first we'll talk about the Nifty. So if we talk about the Nifty chart structure from last couple of weeks, the stock Nifty was trending downwards from last 3 weeks. But yesterday after 1 hour, we seen very sharp recovery from the lower levels from 24,900 levels, and it formed kind of a hammer pattern on the daily scale near its support zone that also holds its 50 DEMA. So far looking at the chart otherwise Nifty is still in a range between 24,900 to 25,250, 25,300 levels. Today we are seeing a positive opening. So 25,150 on the intraday basis would be a key level to watch out for. If Nifty sustains 25,150 levels, definitely you can see an uptick towards 25,250, 25,300 levels for the coming week. Now talking about the Bank Nifty. So Bank Nifty has been relatively outperformer over here after the result of ICICI Bank and HDFC Bank. So Bank Nifty also relatively outperformed yesterday, and today after a positive opening, we have to see 57,000 level for our intraday positive buyer. So till Bank Nifty holds above 57,000, we can see an uptick towards 57,250, 57,350 levels.
25,135, 44 points higher. That's the opening tick for the markets, viewers. Let's look at little deeper. It's Eternal, the first stock that we will track today, 298, about 10% higher in trade. That's the first stock that climbs on. Remember, yesterday it was up by 7%. Today it's up by almost 10% on Zomato. The top mover on the Nifty following the earnings that have come in. Brokerage houses that are penciling in higher targets. The highest target that is coming from the brokerage house today after the earnings is 400 levels also for Zomato. Let's look at some of the other stocks. Bajaj Finance is up by 1.2%. IndusInd Bank is climbing higher, almost 2% up in trade among the top movers. Trent is up. You also have Grasim, Ultratech Cement from the cement basket that's up. That's another pocket that we will be focusing on today. And of course, some metal stocks that are higher. What's not doing well? It's some of the IT names and Reliance Industries that continues to drag even after yesterday. Half odd percent loss for Reliance Industries today. 1420 odd levels can be seen. Remember, the stock dragged by about 3% post earnings yesterday, and today it's down by another half odd percent. Infosys, Bajaj Finserv and Eicher Motors. These are the top laggards on trade. In the F&O space, Eternal, that's the top mover. PNB Housing Finance, also post earnings. IndusInd Bank, these are the stocks that are up. Small cap index is actually climbing up higher in the initial trade vis-a-vis the major markets. 19,042 odd levels can be seen on the small cap index now, half odd percent higher in trade. Let's actually look at the key stocks that are buzzing. and that are pulling the small cap index higher in trade by almost 0.5%. Nuvama Wealth, that's up in trade. Afcons Infra 3% higher. PNB Housing, IEX, Aster DM, Angel One. So a lot of these brokerage houses, wealth management companies are clearly in focus. That's another one that we can focus on. Healthcare related stocks are higher. Aster DM, Narayana Hrudalaya both are up. We can also look at some chemical space. Himadri Specialty Chemicals is higher in trade. Cement space clearly higher. Ramco is also pulling up. That's another space. So much of moving action that we can actually look at. Let me look at PSU stocks. REC is higher. HAL, which picked up pace yesterday, is also up. PFC is up. BEL is higher. Railway related stocks are in focus also right in the beginning. Banks are higher. Metals, mid caps and small caps. FMCG, auto. But what's dragging? Consumer durables today is down in trade, about 0.3% odd. Real estate, infra, pharma and IT. These are the pockets that are still lagging behind. Let me quickly get back with Arpit and try and understand on the stocks. Eternal for you. What would you do here now after the 10% rally we are seeing? 300 levels can actually be seen now on Zomato.
So actually, if we talk about all the new age companies, Eternal has been an outperformer. So when the
Yes.
market also corrected, it definitely corrected towards 220 levels, but this was the first counter that really moved fast. And yesterday, after this result update, if we see the price action, definitely yesterday itself it gave a sign that today it can see some gap up opening, but the stock is already 10% up. So technically, the stock from where talking about December 24, 305, 308 was the previous all-time high. So if someone is holding this position for a trading bet, definitely you can book profits near 300, 305 levels. Any closing above 307 will definitely start the next leg of the rally for Eternal. Positionally, we are still positive and definitely can see 350, 400 on the cards with a view of 6 months to 1 year time frame. So overall, with a positive bias, for the immediate basis, if someone has already taken position, so you can book profits near 300 levels.
Okay, got that. So I hope viewers, you've got an idea as to how to look at Eternal at this point in time as well. Let me just actually look at some of the other stocks. Are you looking at the wealth management space, brokerage spaces from the capital markets? What's stacking your attention at this point in time, Arpit? And what do you make of the strong momentum here that's building up?
So overall, if we see overall this space as a whole has been quite outperforming.
Hmm.
And if we talk about the leader over here, so we like to go with the leader. So if we talk about SGFC AMC, where the stock after its result also has seen a good rally of 10 to 15%, but as we
Okay.
say, that relative outperformance continues. So SGFC AMC, though we have seen a good rally from 5,200 to 5,600 levels, but any dip towards 53, 40, 53, 5,400 levels would be a good buying opportunity within this counter. Along with that, if you talk about Nuvama Health, so post is the fiasco the last week, the stock corrected 10%, but the good part is that it is near its support zone of 7,600 levels. So I think from a risk reward wise perspective and from a positional perspective, the entry point is quite favorable at this junction, and definitely you can add in parts near 7,800, 7,750 levels. So this two counter looks good from a positional perspective. On the immediate basis, you can build position in Nuvama with keeping stop loss of 7,550 for an upside move towards 8,200.
Okay, fair point. That's the brokerage space for you. Another space that's taking high is cement. Arpit, how are you looking at the cement buzz that has kick-started? We will be witnessing Ultratech Cement post-earnings. Grasim is higher. Some of the mid-cap cement space stocks are also moving like a Ramco Cement right now. What exactly is your position? Do you think this entire space of cement is getting into a favorable trading zone? And any top 2 or 3 picks that you could choose for our viewers?
So surely, if you see the July series, when we start with the monthly analysis, cement pack was showing some signs, and in the last couple of days, where the index has been very much dull, but in spite of the weakness in the broader market, cement pack was holding well. And within that, if we talk about first, that a mid cap counter, that is Ramco Cements. So if you look at the chart setup wise on the monthly scale, a classical range breakout above 1,100 levels after almost 2 years, strong bullish candle. In last couple of days, the stock corrected from higher levels, but the bigger trend is intact. And I think from here on also we can see good rally towards 1250, 1300 plus going forward. So first would be from the mid cap space, Ramco Cements. Second would be from the heavyweights, Ultratech Cement. So though if we see the heavyweight, the stock is slow and steady, but a classical range breakout on the monthly scale after almost 12 months above 12,000 levels. From last few days, the stock is consolidating, holding well above its 10 DEMA, and slowly steadily the stock can head towards 13,500, 14,000 levels from next couple of weeks time frame. So Ultratech from the large cap and Ramco Cement from the mid cap would be our preferred picks within the cement space.
Okay, got that. So large and mid cap, both choices you've got, viewers. As far as the cement basket is concerned, what else is moving up? Remember, in the F&O space, it's Info Edge. Remember, Info Edge also has a sizable stake in Zomato, and whenever we've seen Zomato move up, Info Edge, Naukri.com, that also moves up in tandem, about 3% higher. Only linked to a Zomato uptick right now, Arpit, would you say, or does the stock inherently have its own strength as well?
So I think the effect is the cascading wave of the Zomato that has been pushed onto this counter. If you look at the technically the chart structure, the stock is still in a range between 1380 to 1540 levels. And I think broadly going forward also, if you see overall the mid-cap IT space has been still in that phase itself. So I think it's more of a trading bet. If someone wants to enter, can enter with a stop loss of 1400 for an upside move towards 1520, 1540. But overall, it's just in a range, and relatively, Eternal is definitely strong as compared to the counter that we mentioned.
Sure. Okay, time to take a very quick break, viewers. Arpit and Jay Thakkar both will be with us post the break to discuss about markets. So stay tuned.
It was a united front formulated to combat the Modi juggernaut. India bloc that managed to make a significant dent in the 2024 Lok Sabha polls is now in tatters. Once a group of over 20 parties, now the opposition bloc stands divided. In a fresh rumbling, Rahul Gandhi has locked horns with ally CPM. The leader of opposition in the Lok Sabha ruffled feathers in the left by putting RSS and CPM in the same bracket and terming them ideological enemies.
I fight the RSS ideologically. I fight the CPM ideologically. And I fight them in the realm of speech. But my biggest complaint with them, is that they do not have feelings for people.
Rahul Gandhi's remark has drawn
Welcome back. You're watching Market Today on Business Today Television. We're talking about the markets with Arpit Beriwal now with us. 25,122 is what the Nifty is trading at, about 32 points higher in trade. We're focusing on a lot of spaces that are buzzing in trade. Eternal is now 10% higher. Trent is now moving up. Tata Steel is also higher. A lot of Tata Group companies are in focus right now. Any suggestion on Trent? Do you think this is a good enough zone to again look at this Tata Group stock that was was an outperformer in the last year, but so far has not actually been a performer in the current calendar year. We're already in the second half of the current calendar year, and yet on every parameter, Trent has been a negative return giver to all the investors this year. But do you think for the long-term investors, this is just the space to actually look at Trent for a fresh buy?
Back to the 2024 chart, we have seen a very sharp rally in this counter from 2,500 to almost 8,500 levels in last 1 year. Post that, we have seen a sharp correction as well. And generally, if we see the overall, the market corrected from 8,000 to 4,000 levels trend. So if you look at the chart setup on the monthly scale, the overall, the counter is still in a range between 4,800 to 6,000 levels. So here on, definitely from an investment perspective, it's a buy and dip counter. Currently, the stock also corrected in last couple of weeks from 6,000 to 5,400 levels. So from a medium term to long term perspective, definitely it's a more of an investment idea. From an immediate trading perspective, the stock is still in kind of a downtrend. So I think any pullback move, better to avoid that. But from an investment perspective, definitely 5,400 or the stock further correct towards 5,200, 5,100 levels, definitely it would be a very good entry point from a 6 months to 1 year perspective. From a trading bet, better to avoid as there are better opportunities in the market from a bullish bias.
Okay, got that. Let's focus on another pocket that has been buzzing. How are you looking at chemicals, specialty chemical space, Arpit? Is this space looking interesting now after a long haul of consolidation? Is this coming back into focus? We're looking at, a lot of chemical names, Himadri Specialty Chemicals, Chemfab Alkali, that's also buzzing in trade right now from the broader markets. Anything else also that strikes your attention, and what would you do here?
So overall, this space, if you see, this space has been a little bit tricky. And if you see within this space also, selective counters are outperforming where the selective counters are still stuck in a range. So first, if you talk about Himadri Specialty, if you look at the chart structure of Himadri Specialty, relative to the stock, the structure of the stock is positive. On the monthly scale, it is forming higher lows. On the weekly scale, on the daily scale, it is consolidating. It is finding some pressure near 52, 520, 530 levels. But I think looking at the overall setup wise, a good base formation has been seen around 500 levels, and I think from here on, whenever there's seen some rally in this sector, this counter can outperform towards 550, 600 levels. I think this counter would be on radar from a medium term to long term perspective. Himadri Specialty Chemical immediate basis is still trading a range, so 505, 500 would be a stop loss level on a trading bet. On the upside, 535, 540 can be seen.
Okay, fair point. I hope this has also helped you out. Now, remember viewers, apart from Eternal, that Zomato, even Swiggy is pulling up 7.5% higher. So let's compare the charts of both Zomato and Swiggy now. You did talk about Eternal. Arpit already. What about Swiggy? How is it poised? Do you think it's also gauging some strength only from Zomato's earnings, especially Blinkit's earnings that have come in this time around? Do they point to probably Swiggy also reporting better set of numbers, and that's why the stock is moving up?
So definitely there's a rippling effect that is happening on this space as a whole. And if you look at the chart scale of Swiggy also from last month itself, it gave some signs of bottoming out on the monthly scale, where the stock corrected from almost 600 to almost 320 levels. In the June series, the stock has seen good rebound from the lower levels. And if you look at the monthly setup, a classical range we got on the weekly and the daily setup above 400 levels. And definitely from here on also, there are more legs of rally in Swiggy towards 450, 480 levels. So from a positional perspective, a good risk reward favorable setup. After a long term, it has given a range breakout above 405 levels, and definitely that effect can be seen towards 440, 460 levels. So it still looks good on the chart for a 2 to 3 weeks perspective.
Okay, got that. Let me also welcome Jay Thakkar. He's also joining in on the program with us now. Jay, good morning to you and good to have you with us. Finally, your internet seems to be sorted out. I want to first begin on the food delivery space. That seems to be in action, right from yesterday. It started off with Eternal, right after it's posted its numbers, and 7% higher yesterday, another 10% up today. And Swiggy is also up by about 7.5%. Do you think the worst is over for the industry? It was actually consolidating for a long haul. Is it ready for catapulting to a higher trajectory for both Zomato and Swiggy? Even Info Edge is higher by about 4% as the company holds about 13% stake in Eternal, worth about $4.5 billion. So all of this food delivery, e-commerce aspect is coming back. What would you do? And which is your favorite between Zomato and Swiggy?
Hi, good morning to you, Sakshi. And first of all, apologies for coming late. And of course, there was few of the internet issues But then, actually, I would say that um, as far as these two stocks are concerned, which you have asked, in fact, I use the services of both of them. Right, so that's how it is. I mean, and they are quite reasonable as well. I think the delivery space have definitely picked up quite well in India as far as the adaptability is concerned among the users is also quite high and is increasing day on day. So definitely, I think the overall space for the long term is good. The only issue I would say fundamentally could be that if at all any other player actually jumps into this and provides some better deals, then I understand it takes time to develop these kind of businesses. I mean, they have definitely spent many years, burned a lot of cash, and thereafter turned profitable as far as Eternal is concerned. But then I think that in the short term we had seen a lot of short, but that was built up in Eternal. The initial rally, Sakshi, which we have seen was mainly on account of short covering, and now we are seeing fresh longs also getting add on. So I think about the lifetime highs of 308, 310. Zomato, that's Eternal, is likely to inch higher towards the levels of 350, 370 as well. And among the two, if I have to choose one, it has to be Zomato first. But I use the services of both. That is a distinct, I can say.
Okay, fine. You use the services of both, but one is definitely preferred on the charts. Okay, let's move on from the food delivery e-commerce space to spotting something different as well into the markets. And we are going to be now focusing on the defense and the railway space yet again from the PSU basket. Arpit, are you looking at any fresh moves that are again coming in after a gap of about a few weeks onto this space? Is this space also now looking at fresh buys?
Actually, if we see overall, first talking about the defense space. So in last couple of days, we have seen good decent correction across the all the counters within the defense pack, almost 8 to 10% correction. And if I look the charts at above weekly scale, as of now, the stock has just seen some pullback from the lower levels. But I think it's better to wait for this weekly close because the stock already corrected. However, if we want to see from couple of counters that can be kept on radar, first would be HL. So broadly, the HL has corrected from 5100 to almost 4600 levels, and yesterday took support in its previous support zone. Some pullback is seen from the lower levels. However, 4850 would be a key level to watch out for. If it closes above that, then only it's better to build new position in this counter. Overall, this space is still finding some pushing from the lower levels, but it's better to wait and watch, because if you see overall the market has been very much stock selective. There has not been many opportunities within the space, so better to wait. If you want to still go forward, HL would be a preferred pick within this space.
Okay, got that. I hope this has also answered your question. Jay, for you, any key choice from railways or defense, or are you staying away here?
See, so actually, if I have to choose a couple of stocks from these space, then I would avoid railway as of now. But as far as defense is concerned, then my choice would be BEL. I mean, after the defense stocks having seen a good rally from the recent lows. All of them, in fact, the index made a new lifetime high, the defense Nifty Defense Index, and within which the stocks also rallied quite a lot. But I think that BL and BML, I mean, these are the stocks which I think are likely to do better going forward, fundamentally quite good. So these are the two stocks which I will remain with. As far as other defense stocks are concerned, I think there can be some consolidation out there. But BL, BML, these are the few stocks I think are likely to do better.
Okay, fair point. We'll keep an eye out on these particular stocks from the defense basket too. What's not doing well is pharma, viewers. That's falling in trade right now. You can actually see an almost 1% downtick. Real estate, FMCG, auto are also dragging. Consumer durables are also falling in trade, about 0.2% odd. Let's tackle consumer durables. Arpit, the decline that we are seeing on a Voltas or say a Crompton Greaves consumer, what are you looking at here? Do you think the dampness is coming from early monsoons that has perhaps doused some of the sales that could have come in the extended period of June or July, that may have got compromised for these companies?
Actually, if we see overall this space as a whole, selective white goods, if we talk about the ACs, relatively selective stocks still outperform. But if we talk about the old traditional players such as Havels and Voltas, this counter has still been in a range. So if we particularly talk about chart structure of Havels, for example, from last couple of weeks, the stock is still trading in a range between 1490 to almost 1580 levels from last almost 10 to 12 weeks. And as of now, there hasn't been major momentum seen. Now, on the contrary, if we see talk about selective companies such as Amber Enterprise, so
Yeah.
a very sharp outperformance we have seen in the last month itself. Slowly, steadily, the stock moved from 6,500 to 7,500 levels and still holding well near its life high territories. So over here, we have to see a very selective approach where Havels and Voltas are relatively underperforming, but selective AC companies such as Amber, and if we talk about the non-FNO space, one space that was very looking attractive was Hitachi Energy. So where the entire space was underperforming, Hitachi Energy was outperforming. Gave a classical monthly breakout on in the June series above 15,000 levels, and the stock has been in a northward uptrend. So definitely we have to be very smart enough to pick selective pockets within this space. So few counters are outperforming. Ember and Hitachi Energy still looks good within this space going forward, whereas Havels and Voltas is likely to underperform going forward.
Okay. Jay, to you, any key pockets that you are looking at actively right now? Any key stocks that you are looking at, probably getting into a positive trajectory now, a better trading zone? What can you point out for our viewers?
Specifically to Nifty consumer or overall market, are you
Overall
saying, Sakshi?
markets, overall
Okay.
markets.
Closing. I mean, banking has definitely done good and has been doing good and has been one of the outperformers actually. And
Yes.
what has turned overnight or over the weekend is the results, right? And now last week, if you see Bank Nifty on a Friday had a very weak kind of a closing, and it was exactly opposite, or rather, I would say, stronger closing on a Monday, because of which actually I would say there has been a lot of unwinding in the calls and a lot of additions in the ports as far as Nifty and Bank Nifty are concerned, clearly indicating that despite Reliance being down by more than 3% in yesterday's trading session, the Bank Nifty and the Nifty were managed to hold on quite well and close quite well in the green. So clearly indicating that banking in the short term would likely to continue to see its uptrend until Sakshi 56,000 levels on Bank Nifty are held. I mean, that's going to be very,
Yeah.
very critical. So SBI, I think from the PSU banking pack, recently had actually taken off 820 levels. It's still trading above those levels where we have the max pain is trading above its 20-day VWAP. I think that 810 in the near term is a very critical support till those levels are held. The probability of it inching towards 850, 860 is quite high. That would be my first buy recommendation. Sakshi, second would be definitely, pharma is trading negative, so I would like to avoid that. But then Piramal Enterprise, which is trading around the levels of 1290, Sakshi, has been a good breakout, good long build up, consolidation breakout, momentum bullish crossover, trading around the levels of 1293. I think 1240 is a very, very critical support on a closing basis. Till those levels are held, we can see the levels of 1450 as well positionally. So Piramal Enterprise and SBI. I mean, these are the two top recommendations from my end.
Okay, got that. I hope viewers have noted down those two recommendations from Jay. Arpit, I wanted to focus on Reliance Industries with you. 2 days of a drop after the earnings that we have seen. This is despite record profit that came in for the company. There are concerns that analysts have raised about the slowing momentum on the retail segment, on the expansion part, as well as muted set of numbers from the Reliance retail segment and O2C, the oil into chemicals business. Yesterday it was down by over 3%. Today another quarter percent of a downtake, 1424. What would you do with the chart right now on Reliance?
So actually, we see overall after a good rally from almost 1300 to almost 1500 one-way rally in last couple of months, stock started correcting way back start of the July series itself. The stock corrected from 1540 to 1420 levels. Now, if you look at the time frame on the weekly setup wise, the stock base formation was around 1380 to 1400 levels. If I see the weekly chart, the stock is back to its previous support zone. Look at the image chart perspective on the daily scale, the stock is still forming lower highs that clearly indicates that upside is capped and trading below its 50 DEMA. hour. And if you see overall, one of the biggest dragger for Nifty was Reliance from last couple of days, because of which the mainly Nifty was underperforming. So looking at the chart specific wise, immediate basis 1444 is a intraday hurdle, immediate hurdle for Reliance. Till it closes below that, some weakness can be seen towards 1380 levels. I think 1380, 1385 would be a major support zone. At that level, you can revisit what to look out for the next trading opportunity wise. But as of now, it still looks weak. 1444 would be a key level, 144, that would be a key level to watch out for. Any closing above that would only provide some stability. Till then, overall upside is seen in this counter.
Okay, fair point. So that's the view that's coming in. Meanwhile, viewers, Eternal has gone to a record high level, 302, 303 being seen for the company as well right now, 11.5% high. In fact, it's touched a historical high of 311 in trade today. So that's what it has caused. And of course, we are seeing some profits being taken off at those peak levels as well. But we've seen a fresh record for the stock in trade today. Just wanted to point that out. The market breadth is weakening now. You can see real estate, pharma, auto, PSU banks declining, FMCG, consumer durables. Even mid caps have slipped now, oil and gas. Nifty bank is also dwindling a little lower now, with private sector banks also declining. What's still holding is small caps, financial services, metals, and now IT is picking up some pace. Jay, any suggestion on the IT pack? What are you doing with the stocks? Last week, there was entire weakness that we saw because of the earnings that were coming in. This week, of course, the focus was missing and suddenly we are seeing some pickup now.
Of course, I mean, that's a very valid point, Sakshi. I mean, great to, pick this up. And at this moment, I mean, generally we see, and we've seen recently as well, Sakshi, that Bank Nifty and Nifty IT, have this kind of an inverse correlation. We've seen Bank Nifty performing, Nifty IT not, and vice versa, right? Now, the numbers are done more or less with the large cap companies in the IT space, and we have seen that correction coming in. I think for this series, at least, IT has corrected to a level where it has got a good support, in the range of 36 to 37,000. I think it's a good support. And from here on, if not rally, then we can at least see a short covering happening, because there are shorts in IT for sure. There were shorts, there were short covering, post results, the shorts kept adding on. So I think a bounce to 38,500 can't be ruled out. So 1,500 bounce is what I see in the IT. And if I have to select these stocks from this, then definitely it would be mid-cap IT names, Sakshi. I mean, one can focus on Tata Elxsi. One can also focus on, LTI Mindtree. I mean, these are the two names which I would like to go with. I mean, they have corrected recently less and looking relatively better than as compared to the large cap names.
Okay, fair point. I hope this has also answered a lot of viewers' questions as to how to look at the pocket that has been a soft one in the markets right now. Our first half an hour candle is now Arpit. What would you suggest on the market for the day?
Sakshi, if we see, as we discussed right at the start of the session also, Nifty is still trading in a band between 24,900 to 25,250 levels. And if we see this chart set up on the daily scale, index negative formation lower highs above 25,100 levels, but 25,150 would be a critical level to watch out for. And I think initially 1 hour would be an important level. If Nifty sustains about 25,150 levels, so some move can be seen towards 25,200, 25,250 levels. Because if you see from last couple of days also, index has been trading in a range where the major action is seen in stocks wise. So on the immediate basis, 25,150 would be a key level wise. Intraday support would be around 25,000. That would be a key level on the psychological basis also, and as per the option data also.
Okay, fair point. I hope this has also helped you out in getting a view. Jay, to you now, when it comes to the market and, the action to follow from here, any strategy that you're recommending to investors?
Sure. See, Sakshi, I would say that one thing which I would like to still highlight to the viewers is that the IVs, that is the implied volatility, has yet not moved up. Despite we have seen market falling below 25,000, reversing back and closing in a day above again 25,000. The volatility has not gone up, and I think we might see that coming in. I don't know, maybe by the end of the month, that is on the monthly expiry, or maybe in the start of the week, first week of August. But then volatility is there to come, and hence I think that the traders should be trading with hedge positions, either with a covered call or a protective put positions. If they are actually initiating a long or a short in the future segment. But as far as options is concerned, I think actually that till 25,000 levels now are held. It was kind of aggressive put writing which you have seen. In fact, in yesterday's session, if you see, the PCR also jumped from 0.58 to 0.73 approximately, indicating that the bulls jumped in very aggressively, and now indicating that 25,000 is the support till those levels are held, is inching towards 25,200 Sakshi. So buy now, one can buy a call option at present, targeting 25,200. You can book out the profit there. As you can do a bull call spread by buying at the money call option or slightly in the money 25,100 and selling 25,250 probably would get you a good yield. These are the two option strategies which I suggest. And if someone is buying a future, then one can buy futures, but simultaneously sell 25,400 monthly option, not the weekly, monthly option in order to hedge. So my stance would be a short-term bounce until 25,000 levels are held.
Okay, got that. I hope this has also answered a lot of viewers' questions. Okay, Jay, and thank you so much for being with us, and thank you so much, Arpit, also for being with us on the
Thank you.
program today.
Always a pleasure,
You help
Sakshi.
us understand a lot about the market moves from here, key strategies on the markets, and of course, key pockets and stocks to really look out for. Thank you so much. Hope you have a great day ahead. We'll see you both soon.
Wish you the same. Thank you.
Thank you so much. All right, viewers, let's start wrapping up the morning trading action on the markets. 25,124. There is a 33 point of an uptick that you see. It's been a choppy first half an hour in trade. We're trying to hold on above 25,100 odd mark on the Nifty. The clear buzzers have been food delivery giants and e-commerce giants like Zomato and Swiggy today. We've seen a record high move for Zomato, almost at 311. And we have also seen Swiggy inch higher by about 7 odd percent after Zomato's earnings. And what we're also looking at is some of the defense names that are hovering higher, like a BEL and HAL. You're also looking at some power related names that are up in trade. Banking names, only a select few are higher, even though the private bank index is just slightly higher. It's been volatile. ICICI Bank continues to drive higher. Day 2 after its earnings. HDFC Bank also moves in higher. So among the key contributors on the Nifty, on the positive side, you will again find both Eternal, which is contributing nearly 39 points to the Nifty's move. And the overall move that we are seeing in terms of weightage that's coming in. ICICI Bank and HDFC Bank, they are the ones that are truly contributing to the Nifty's move today. Let's also look at, BEL, Titan, Trent. These are the other top performers and contributors to the Nifty move today. On the downside, Infosys, Bharti Airtel, Reliance Industries, M&M, L&T. These are the top drags right now. Reliance that continues to be subdued post its earnings right now. Only media stocks, financial services, private banks, Nifty Bank as a whole and metals are higher, along with small cap stocks right now. All right, so that's the morning trade for you viewers. We'll wrap it up on that note. But throughout the course of the session today, a lot of earnings coverage is what you will see on D Street. In case you have questions about the stocks, then at 12 noon, I'll be back with daily calls to help you understand more about the strategies you need to follow on your stock portfolio as well. So stay tuned for that. Many thanks for joining in onto the morning edition of Market Today.
A leadership shake-up